Hey everybody, my name is JJ. You're watching Bull, Boom, Bear, Bust. We're back with another dose of economic reality. I apologize that I missed the report yesterday. I decided to take a day off. I was feeling a little bit burned out, plus some stuff happening in my personal lives. Got me a little bit, I wouldn't say stressed out, but just busy. And not getting enough sleep, so I decided to just take a day off, recuperate, rest up. And I'm blessed to be in a position to be able to do that. I know some people, they have to put out 2 videos a day just to get by. So luckily, this is not my only source of income here, so I can kind of take it easy when I need to. But as the news ramps up, as big things come out, of course, I'm going to try to ramp up my reporting. But let's talk about what is the big relief on Wall Street. Stocks surge actually on Friday, which was May 5th. Why did they surge? Well, that's because a strong jobs number. So apparently the jobs numbers were so good that everybody's going to start paying off their credit cards. People are going to start paying off their car loans. The pause in student loans is going to be lifted because everybody's going to pay off their student loans now. And, this jobs numbers means everything's going to reverse. And all the things we've been talking about as far as how the economy is declining, that's all just going to reverse. And now the opposite's going to happen. People are going to get out of debt. People are going to save up a lot of money. People are going to be happier and debt-free. Anybody that believes that, you're on the good stuff, right? So here's what's really happening. Like, a lot of these jobs are people that lost better jobs, and now they're going down to sometimes 2 part-time jobs. And that's the number of jobs counted. Of course, that looks pretty good. When somebody loses their tech job, for example, they pick up a part-time job at McDonald's, another part-time job maybe at the department store, maybe Kohl's, maybe JCPenney, if there's any JCPenney's left. I mean, this is a joke. Jobs report post stunning beat. That's what's being reported here. 253,000 jobs added. Well, we are seeing about 246,000 jobless claims every week. That's close to 1 million a month, right? So every person that's laid off, well, a lot of them will go out and get a different job. Some people will get on unemployment. But ask yourself, why haven't we seen the labor force participation rate surpass where it was in pre-2020, right? We never recovered from that. I've showed you guys the chart here dozens of times. We've never recovered, right? So a lot of this data is being put out there to make people feel, I think, a sense of relief, especially after what happened a few days ago. We had that report that we talked about how about half of the population doesn't feel safe now with their money in the bank. And people are looking for alternatives. I called my Metals 401k provider the other day, and they were so busy they couldn't even talk to me. I was going to put more money in from my regular 401k into the precious metals 401k, and they were too busy. Like, oh, we'll call you back maybe tomorrow. That's how big the demand is right now. People are scared. People are concerned, and it's justifiable because right now we already are worse than what we saw in 2008. In 2008, it was a financial crisis. So right now it's worse, right? The number of, not just the number, the magnitude of the bank failures has already surpassed what we saw in 2008, folks. So this is big. And the really scary part is we're just getting started. We're definitely not out of the woods. Stock markets, all major indexes in the green on Friday. Also, we saw a regional bank recovery with a lot of the stocks recovering somewhat, in some cases quite a bit. What that is, folks, I think that is a short squeeze. A lot of small mid investors jumped into the market and shorted these banks. A handful of a few billionaires, I think, went in, bought these regional bank stocks, pushed them back up. A short squeeze. They're going to try to squeeze the shorts out of there. Guess what? After the short squeeze is done, after they need to cover their shorts, these stocks are going to start dropping. Again, we're going to see a lot more pain in the stock market, especially with the regional and the smaller banks. Again, we're just getting started. Anyone thinks that this job number means that the crisis has been reversed or halted or even paused, you're definitely kidding yourself, in my opinion. Let's talk about IBM. IBM plans to replace 8,000 jobs with AI, artificial intelligence. And I was actually clicking through some streaming services the other day, and I came across a song that was completely created by AI, artificial intelligence, right? So this was, I didn't like the song, but they're trying to replace everything that humans do with AI. Of course, I mean they're going to make more money if they do that. But what kind of world are we going into? I mean, how many more unemployed people are we going to see on top of the ones that we already know about that's going to happen because of the layoffs and the shutdowns of the companies? We're already on pace for more retail bankruptcies this year versus any point in history. We're on pace for over 200, and this is scheduled to be on pace to be the worst year of all time for retail bankruptcies. Let's talk about more bank collapses. The Seattle Times, the latest bank collapses this is what they say. This is the headline: are a canary in the coal mine. Absolutely, it's just the beginning. It's just a canary in the coal mine. They're predicting much more worse to come. Over the last 3 weeks, the outflows from banks escalated. Deposit outflows topped $360 billion in the past 3 weeks. Again, the panic is just getting started. We're still in the early innings. We've got a long ways to go. And, people are being fooled. A lot of people are being fooled right now. I know a lot of people going out, making big purchases. I'm erring on the side of deflation right now with the bank failures, the tightening with the lending. And I think when things start dropping, they're going to start dropping very, very rapidly. Now, there's a lot of news out there about how home prices have increased. And a lot of times what they'll do is they'll try to float out good news right before the collapse. I'm not saying it's going to collapse tomorrow or next week, but I'm saying I think we're on the precipice of something very, very big. And again, if all these jobs added with such good news, why not resume student loan payments, right? So all these jobs are great. Unemployment dropped to 3.4%, so everybody can start paying back their loans. You're probably laughing right now. I can hear some of you laughing. Of course, they're not going to do that because we know these jobs are largely service sector jobs, many fast food jobs, retail jobs. These jobs aren't going to get people through this economy with inflation that really has barely slowed down. And now we've got the powers that be out there talking about slowing down or pausing the rate hikes. They haven't really won the inflation fight. Inflation hasn't dropped to 2%, which is the target. But even if it did drop to 2%, that still wouldn't be good. That means prices are still going up, just only 2% of a year, 2% a year instead of the 5, 6, 7, 8% that we've seen over the past year, every month. So even getting the inflation down to 2% is still a big fail, and it's not going to get people in a better position financially, especially the working class, the middle class, the working poor, as some people call them. Let's talk about this. Consumer credit card debt explodes the second fastest pace on record. I'm looking at a chart here, and it's very, very scary. Folks, we're at the end of the line here for the consumer, and there's a lot of things going out there being talked about to make people think that everything's fine. Everything's not fine. And if you haven't woken up yet, we've been talking about how the banks are insolvent for years, how they're loaning out money that they don't have, how lending creates this illusion of an economic boom. Folks, what was looked at as an economic boom, it's a debt binge is what it is. It's a debt binge. If it were not for the debt, people taking on record amounts of debt, you wouldn't have saw, one, the job growth that we saw over the past 10 years. You wouldn't have witnessed the rising prices and assets, especially homes and automobiles. Of course, we had a lot of shortages happening starting in 2020. I think that was kind of a mask, it fooled a lot of people. People thought that was the only problem with the economy was all the shutdowns and et cetera that we had in 2020. But leading up to 2020, things were not very good at all. And why do you think they had to have millions of people pause their payments on different types of loans, on their rents? Some cities still, people aren't paying back their rents. They still have this renter protection in many cities. So folks, all this should be obvious that things are not okay and that we need to keep stacking and keep preparing. Now, in my last report, I believe I talk about canned foods. I talk about things you could use to barter if the system goes down. I think we're going to wake up one day, the banks are going to be closed, and it's going to be kind of like when they halt a stock, when the stock sells off rapidly. What they'll do is they'll halt the trading to try to stop the bleeding. And I think that's kind of a mechanism for certain people to get out of the stock. And then once they resume the trading, then the stock drops even more. And a lot of the big money people, got out during the halt. That's just my opinion. That's what I believe. But I think they're going to maybe even halt the entire banking system if we continue to see these outflows. And the more bad news comes out, the more people are going to panic, the faster they're going to pull their money out of these banks. And ultimately, I think we're going to see a consolidation down to just a handful of a few mega banks. And some people say that's on purpose. Some people say, that they want, the powers that be want consolidation. They want more power within just a smaller group of banks. That way they can dominate everything. More layoffs. Let's talk about Shopify. Shopify is going to be slashing 20% of its workforce. Wow. 1 in 5 workers, 20%. That's huge. And Shopify is a very big company. I've heard a lot of people talk about them and promote them here, even on this platform. Forbes recent article here: more retail bankruptcies are brewing. Yes. So if you think the good jobs number that we saw, 246,000 jobs, is going to give people so much money, they're going to go out and spend it. And now all the retailers that were going out of business, now they're going to stay in business, and they're going to start opening up more chains or more locations. That's just silly. I mean, there are some chains opening up new locations. For example, a lot of the budget stores and low-cost stores are opening up new locations. There's a store out here. I've seen a couple locations being constructed, and I see out here, I'm talking about Southern California. It's called Five Below, where everything's $5 or less. We've got the 99-cent stores booming, the Dollar Tree, the dollar stores are booming. Because of inflation, the Dollar Tree is now $1.25. Who knows? It's going to have to go to $1.50. I mean, I'm hoping for deflation. That's one thing about a banking crisis is typically you see deflation. But if we fail to get enough goods and products for people to consume, you still may not see prices come down that quickly. Now, we've got a senator out there, Bernie Sanders. He's talking about putting forth or implementing a $17 an hour federal minimum wage with a 32-hour work week. Well, here's the problem with that. A lot of people can't get by on $17 an hour, only working 32 hours. So before something like that's even realistic, you have to get the cost of living coming down. Where can you go rent a place working 32 hours a week at $17 an hour? Where can you afford rent? Not many places. You might find a few of them if you look hard enough, but it's going to be few and far between. So, people aren't looking at the big picture, I don't think. And people say, oh, yeah, it's good. $17 an hour. We need to have that so people make more money. Is that going to fix the problem? No. There's a lot bigger problems, right? So they're focused on just small things when we've got a really big, huge financial mess that we're in right now. And, this country is going to look a lot different by the end of the year. And but it's okay. We're going to take advantage of this. We're going to be in a position, you and I, everybody watching, to take advantage of this. Precious metals, have cash for deflation. You might see some good buying opportunities come up. Unless they come out with brand new ways to keep these bubbles inflated, we're going to start seeing some falling prices. There's talks of World War III, which could really bring the markets down and bring the entire economy down in a hurry. And maybe that'll be the scapegoat for this this failure of an economic sector that we're in right now. Maybe there'll be some big war, and that'll distract everybody, and people will think the war was the problem. They'll say everything was fine up until the war. Also, when I say be prepared, have something in your hand, in your direct reach, or in your possession at your residence, at your household, because when these banks start going down, I think they're going to close doors, and you may not be able to get your money out. That's just my opinion. Not trying to start a panic here. I'm just urging everyone to be cautious and be ready for some wild things to unfold. I think we're going to see more panic here in the next few weeks, and some different surprising events are going to be popping up here. Ready? So everybody get ready, folks. So everybody get ready, be prepared, and we're going to be on top of it for you here. Come back for more updates on this channel, and we'll talk to you very soon. Peace.